Hi, my name's Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, it's fair to say that the last month has been pretty up and down when it comes to global financial conditions. For property investors, there has been both good and bad news. Let's start with the bad news. Firstly, the share market is down around 6.5% or 350 points to 5,300 points as we speak. Now, a full-blown correction in the share market is 10%. So we're not quite in that territory, but it's fair to say that share market investors aren't feeling all that good right now. Secondly, there's a lot of debate over the level of foreign property ownership here in Australia. Indeed, Liberal MP Kelly O'Dwyer has come out and said that although the Foreign Investment Review Board has adequate rules in place, the problem is that FIRB, as it's known, doesn't properly police those rules. FIRB has fired back and said that they need more money. Anyway, one of the things that's being contemplated in terms of more money is a fee for all foreign property buyers of between $500 and $1,500 per property. That's yet to eventuate, but we'll see. I've got to say, from my own point of view, I don't think a $500 or $1,000 fee would make much difference to the interest in Melbourne and Sydney's property markets. Also, the high pace of apartment construction in Melbourne, mainly around the CBD and the Docklands, has led many pundits to suggest that price growth at best will be stagnant and at worst could be even negative. Now, it's hard to square this up with all this concern that house prices are going through the roof, but it does seem that increasingly we're seeing a dichotomy, two different markets emerge. For established housing, particularly in the eastern and bayside suburbs, prices are going up, but for apartment buildings here in the CBD and around the Docklands, prices stagnant at best. And the last bit of bad news is that Hawthorn has won yet another grand final. That'll please some of you, but for the rest of you, it's not such good news, is it? All right, now for the good news, and there's also plenty of good news around at the moment. Scotland has voted to remain in the United Kingdom. Now, this removes an enormous amount of potential uncertainty for global markets. I have no doubt that in a few years' time, the Scots will have another crack at this, but for the time being, the United Kingdom remains well united. Also, unemployment. Now, this may only be a statistical quirk, and we'll find out that shortly, but I mean, unemployment fell across Australia from 6.4 to 6.1% in the most recent survey. Here in Victoria, down from 7% to 6.8. Having said that, Victoria is the worst unemployment rate of the mainland states at the moment. Clearance rates in Melbourne have stayed steady at around 74-75%. That's unambiguously good news for property sellers, perhaps not quite so good for property buyers. And also the falling Australian dollar is down to around 87.5 cents now, down from where it was at 94 cents last time we spoke. This can only increase the interest level for overseas buyers because frankly, the lower our dollar goes, the more their foreign currency buys in the local market. So overall, in the last 4 weeks, it's been rather a mixed bag. I think the most important issue is in fact the falling A dollar. As I said, this will probably keep interest rates on hold for the time being, and it's hard to see, as I mentioned, foreign investment in the Australian and particularly the Melbourne real estate market changing anytime soon. Of course, if you're interested in buying a property, whether it's for a home or an investment, don't hesitate to contact your local Hodges real estate office. Their assistance can only be of value. Go to hodges.com.au. Thanks very much, and I look forward to your company again, same time next month.